Cronos could be a very compelling story here shortly because they're going to activate something with Altria. They're going to put that cash to work. And I think it's going to be put into lean businesses that are going to create operating cash flow and ultimate profit.
Hey everyone, welcome to our Trade to Black podcast. I am your host, Shad Dales. Let's get into cannabis. It's cannabis earnings season. There's a few companies that came out with earnings already this week, so let's welcome in, as usual, our two co-hosts, Anthony Verrill, millennial entrepreneur. Anthony, good to see you.
Good to see you. It's good to get some. It's good to get some cannabis reads, start to see what's going on, and it's moderately positive.
Yeah, Benjamin Smith, obviously our lead financial writer. Good to see you, and we finally got something to talk about in cannabis, Ben.
Yeah, finally, earnings season kicks off. Green Thumb with a big one too. Green Thumb, one of the tier ones, and we'll get into it. It's good to see earnings come through.
Yeah, so let's dive into that. Green Thumb Industries, they reported fourth quarter and full year 2022 financial results that came more or less in line with expectations. So Q4 revenue, $259 million, beat the analysts' expectations of $256 million. Although there was a sequential decline of 0.7%. Gross margins also fell 2.4%, with the management pointing to overall price compression behind the drop. On the flip side, operation cash flow increased $22 million sequentially, and cash grew about $30 million, pointing to GTII's strong ability to generate cash. So I'll begin with you, Anthony. What did you think of the overall earnings report?
I mean, I don't hate it. I've always kind of had this benchmark in my head for the tier one MSOs that they need to be annualizing $1 billion in revenue. GTI hit it. They've annualized $1 billion for 2022. I noticed that the G&A expenses on a percentage basis were actually lower in an inflationary environment. I mean, that's a testament to the management team. So, I mean, that's good there. These numbers were propelled by growth in New Jersey. They had a couple of write-downs from Nevada, which, I mean, I think it was like an $88 million goodwill write-down, which I really don't ever like to see. But, I mean, that's just a function of the industry that we're in right now. It was in line. I mean, as long as no one's dropping off a cliff and lowering guidance and we're seeing just numbers just go awry, I mean, it's not going to nuke the sector, and I don't really know how much lower we can go. I know that I think it was Cowen or Jeffries dropped the price target from 18 to 10, which is still above where it's trading right now. So, I mean, I'll take it.
18 to 10. To your point, yes, it's above to where it's trading at right now. But, Ben, what's that say when they're downgraded to 18 to $10? And as well, your thoughts on the earnings?
Yeah, the downgrade came from Piper Sandler, actually, and I think it was mostly, they did mention in the note in their conclusion statement that they were worried about certain factors of the business, like overall headwinds of the sector, but I think it had more to do with what Cowen said earlier in January to start the year, that they don't expect any federal reform to come in soon, and we've pounded it to death on this program that really U.S. cannabis is a play on federal reform, rightly or wrongly right now. So it was mostly about that as opposed to earnings themselves. Now, getting to the earnings, I thought I thought Anthony just said it well. I thought they're pretty much in line. Revenue dropped a little bit sequentially, like 0.7%, but it was still above analyst estimates. Gross margins were eroded by about 240 basis points, which is never a great thing, but at 50%, they're pretty high. That's a pretty high starting point to begin with. But on the flip side, operational cash flow increased, cash on the balance sheet increased by $30 million. And in these type of conditions where the consumer is struggling, where there's all these industry headwinds, I think that this was a pretty strong performance overall. I mean, inline, like Anthony said, I agree 1,000%. Inline is going to be good for the cannabis sector this quarter. We just don't want to see any blow-ups. You don't want to see any guidance where, for full year 2023, where companies are lowering by 10 or 15% on revenue numbers or whatever, EBITDA expectations. As long as we don't get that and we see stabilization, that's what you need to see to create a platform for eventual, a rising of the tide in share price.
What's this say about the overall future of the industry based on some of the feedback that you've just provided, Ben?
Well, I think, from what we've seen so far, it just shows that there's not a lot of growth in the sector right now, unfortunately. Sequential growth, when you have Green Thumb reporting a sequential drop in revenues, that doesn't portend well for the others in the sector. So we're in a period where it's just low growth right now, and now it's just about who can operate the best and who can generate free cash in a very tough environment. And I think the good news is for the companies that can do that and generate free cash in this environment, when it changes, then that bodes well that that they can increase that total going forward. But right now, I think the buzzword is stabilization.
Yeah.
That's what investors want to see, stabilization.
Well, my point, Anthony, was that Ben talked about some positives and some growth for the actual company during these high inflationary periods. But again, my question is that what's your thoughts on not only, not to say here and say like what's your thoughts on their earnings reports, but the overall health of the industry based on some of the positives that they've reported?
I mean, I was expecting a down quarter. I was expecting a down quarter, and I was expecting the metrics to all be down, with very little to give merit to. And I mean, it just shows that these operators, like Ben said, the ones that can operate stable businesses, I mean, those margins are going to expand drastically if we ever get some sort of SAFE or 280E. So I mean, as long as they can keep treading through this environment and get to the period in time where we see regulatory reform, they're going to become nothing but more profitable than they are now. So I mean, if we're setting a baseline here for, let's call it, probably the most hostile operating environment that the cannabis sector has seen, when you pair with inflation, potential recession, and just the way the consumer is operating, I mean, this is positive.
Yeah.
So I'd like to add too one more thing, that it's important that we talked mostly sequentially in this conversation, but if you sort of widen the lens a little bit on a full year basis, like Anthony said, GTI generated $1 billion in revenue and grew revenue 14%. So it's not like, you can't be so myopic that you look at, the sequential quarter over quarter and not look at the whole yearly basis, because really the yearly numbers give you a better sense of trend as opposed to, the quarterly numbers, which are more choppy in nature. So, I mean, if you take the 40,000 foot view, these companies, tier ones, are still growing and generating more cash, and it's still looking pretty good from my perspective, despite the the near-term headwinds.
For our newbies that are learning,
I mean, they're going to keep.
Go ahead.
Yeah, they're going to keep growing too, because I mean, the Northeast is just going to get bigger and bigger and bigger.
Yeah.
I mean, New York still hasn't even started to activate yet.
Ben, real quick, for the newbies that are still learning this industry, when we say sequential decline or sequential revenue, talk further as to what exactly that means.
Yeah, sequential decline or increase usually talks about the numbers quarter over quarter. So in this case, it would compare the third quarter versus the fourth quarter. And then there's the fiscal year, which talks about the yearly comparisons. So when you look at the fiscal year on the revenue profile for Green Thumb, it increased revenues 14% from the end of the fiscal year 2021 versus 2022. When you look at the sequential decrease in revenues, that talks about revenues declined 0.7% from Q3 to Q4. So one sequential is more short-term choppy trends, and the fiscal year is more longer-term trends that a lot of investors and analysts like to look at because it gives you a better indication of trend.
Right. If you want to learn more about this stuff, go to thedalesreport.com and follow us. And most importantly, subscribe to our newsletter, and Ben will explain a lot more of this information for you. Let's move now to IIPR, which is Innovative Industrial Properties. They also released their earnings. They're the largest cannabis REIT in the industry, and their earnings actually beat expectations. So Q4 revenue was $70.5 million, beating the estimate of $69 million average analyst estimates, compared with $70.9 million in the prior quarter and $58.9 million in the year-ago quarter. So total expenses of $29.8 million versus $29.5 million in the previous quarter and $20.5 million in the year-ago period. As a result, their stock at one point, Anthony, was up as much as 8% on Tuesday. Impressive day, to say the least, for the company.
Yeah, I like IIPR. I've owned IIPR since it IPO'd. Full disclosure, I own both of their stocks. I own their common and their preferred. The preferred pays an 8.6% annual dividend, which I'll gladly take. And it's a very nice stock. They invest in dirt. I mean, it's an infrastructure play on the cannabis industry. if you want to, I guess, hedge out your risk on the operating companies, which we all are,
Right.
I mean, IIPR is a great addition to a portfolio. It's been well run from the get-go. I mean, they're mostly in bed with a lot of the tier one operators in tier one markets. They've done nothing but grow their assets under management, grow their dividend, and I mean, it's a rock star stock. I mean, a lot of people don't really, I guess, fundamentally understand it or know about it, but it's definitely something that I would, and it's not financial advice, but it's definitely something that I would have as a piece of a cannabis portfolio. And it is widely held in all the ETFs across the board.
Well,
Now, Anthony, when
go ahead, Ben.
oh, I'm sorry, I just wanted to ask Anthony, when you looked at the financial results summary, did you see any evidence of like asset impairment on the real estate side in
No.
the portfolio, or?
No, there wasn't a lot of impairment. There wasn't a lot of default. And I mean, it's because they're smart. I mean, they're going in with the Crescos of the world, with the GTIs of the world. They're going into tier one high growth markets with tier one operators and putting those leases in place.
So how exactly, because we don't talk a lot about this company, but how exactly does the cannabis REIT work?
So what they do is they buy real estate and then they lease it back to operators. So they'll go in, buy the dirt, and then find operators to come in and put an opco on it that's going to throw off cash, and that's going to give them a favorable cap rate, and it's going to be able to increase their cash on cash returns, which in turn generates that 8.6% annual yield on their preferred that they're paying out.
And you mentioned dividends. Like, what's a dividend look like?
Dividends, yeah, it's got an 8.6% dividend on an annual basis. It's a great cash flowing play on the cannabis industry.
What's this say about?
Now, I'm going to step in there and say that it's definitely got its place and all that. There's also different investments that investors can look at if they want to just invest in the mortgage side of it and not in the actual real estate assets themselves. There's the Ploris Fund, for example, who we cover, and they just invest in the mortgage themselves. I think they take a very conservative approach, and they don't actually invest in the property. They just invest on the mortgage side. So there's different investment opportunities available to investors, whether you want to get the actual real estate or just invest in the mortgages on the private side.
One thing's for sure, real estate just seems such like a secure investment over the last 5-10 years. Whether you're in cannabis or outside of cannabis, it just seems rock solid. And this is a prime example, right, Anthony?
Yeah, I mean, I think if it's one thing that I've learned in my short career in finance, all the high net worth individuals, they own real estate.
I know.
I mean, you can use it to your advantage. You can refi it and then go deploy cash into other assets. I don't think it's as safe as everybody thinks because, I mean, you can easily get into a piece of real estate that goes underwater, which, I mean, we're talking hundreds of thousands of dollars in asset value deterioration versus something like a stock, which you can just sell. It's also not very liquid. But, yeah, I mean, real estate has been the bedrock of American investing in the American financial system for some time now. I mean, look, it blew up in 2008. I mean, it ebbs and flows. If you can catch the cycles, it generates a lot of wealth.
Yep, that's for sure. Let's pivot now. Last one we'll discuss in this podcast is Cronos, Canadian company. Their Israeli revenue increased by 128%. That was the big headline. Sounds impressive. But is there more that meets the eye here, Ben, with regards to this announcement with their latest earnings?
I'm not sure if there's more than really meets the eye. I mean, their overall revenue profile, I think it was up, 28% year over year. Obviously, the Israeli assets are growing more than the core business, but I believe they also have like the hottest brand in Canada, the best-selling brand in Canada, if I'm not mistaken. So there's some good things going on there. I'm sorry, Anthony?
Spinach. It's the number one edible brand in Canada.
Wow. Okay.
Oh, okay. Yeah, right. Spinach. And edibles are a category that's growing quite rapidly. So there's some good things going on in Cronos. I think one of the things that stood out to me when I looked at the summary is their cash on the balance sheet, which is, I think, is like in the high 800 millions, which would put it above Canopy Growth. And so Canopy Growth used to have $5 billion, and now they're all the way down to 780 million, somewhere around there, before the
Yeah.
convertibles that they just raised for an extra $150 million in cash. But Cronos has like 100 million more than them before that convertible. So they're right on par cash wise with Canopy Growth. So we'll see where it goes from there, but they do have some firepower to, acquire somebody else or to do something with that cash. So they're in a decent position on the balance sheet.
What would you? That's a lot of money. Like, the Canadian market is in flux. Go ahead.
But that okay. So I know that I can be quite opinionated on operators, especially with after the segment last week on Field Trip. I'd have to probably say the opposite about Michael Gorenstein that's running Cronos. He was one of the first guys that I actually met in the space. He's a Wall Street attorney, turned cannabis exec. Personally, I've never bought Cronos' stock. The operating business and the cannabis business, I've never really understood, even despite them getting the strategic investment from Altria. But I think Cronos, in the next 6 to 18 months, barring regulatory shifts, could probably be a very interesting play due to the cash position, due to them not overexpanding their operations and having this massive burn. Granted, we were talking about the benchmarks on US MSOs, which we want to see $1 billion in annualized revenue. Yeah. Cronos is annualizing less than 100 million in revenue right now throughout combined global operations. So while their revenue is not very impressive, I'm very curious to see what they do with that little bit shy of 900 million in cash. I'm sure it's going to go to work either in the US or the EU. And I mean, Cronos could be a very compelling story here shortly because they're going to activate something with Altria. They're going to put that cash to work. And I think it's going to be put into lean businesses that are going to create operating cash flow and ultimate profit. So I mean, Cronos is definitely one company that I'd be watching very, very closely in the coming quarters.
I think it's notable too that they, unlike Aphria or now Tilray and Canopy, they haven't really made any play for assets like cannabis assets in the U.S. right now. I think they've been holding back for the most part. Of course, they have the Altria investment, but they haven't really invested in any operators down there, have they?
No.
They bought a CBD. They bought a CBD company that was a little bit of an incestuous transaction. Lord Jones. I think a lot of the guys in the management team either started it or had leverage to it in early investments, and I mean they got a little bit poo-pooed for that, but I mean people forgot about it. But they've also, I'm pretty sure, don't quote me on this, but I'm pretty sure they've picked up a couple of debt pieces and options on like assets that Gotham Green and a couple other big funds in the U.S. have brought out to market. But I mean, I'm very curious to see what they're going to do because I mean, 900 mil is a lot of cash.
Yeah,
nothing
major.
They've got a war chest to deploy.
Yeah, nothing major though in the U.S. market. But do you think that's a smart thing that they haven't made any kind of like acquisition or strategic plan yet?
They can't.
Well, I'm saying something similar to what Tilray has done or what Canopy has done, that if and when federal legalization comes into play, do you think it's smart that they haven't really negotiated anything like that thus far? Especially with that kind of money.
Yeah, I mean that's kind of hard to say because you don't really know what the environment's going to be like on a go forward basis. I just have a feeling that they're going to put that cash together with the infrastructure and the assets that Altria have and probably be able to create something special that goes to market very quickly in the cannabis space.
I wonder what that is. It sounds interesting.
Yeah. They've slow played. I mean, they're smart, though. They're strategic. They've slow played this. They haven't overbuilt operations. They haven't went into markets that have collapsed in on themselves, such as Canada. They've kind of operated with a very delicate point of view, and I mean, the proof will be in the pudding. Something's going to happen.
Yeah.
They didn't blow their brains out like Canopy did with the $5 billion.
No.
Buying everything in sight. They've been a lot more conservative.
Quick recap. What is their global operations? They operate in Canada. What do they have positioned or are they set in place as far as over in Europe?
They have operations in Israel and they have operations in Germany. Which that Israeli number with the revenue up 128% year over year, which, like Ben said, it's probably very minuscule. It's probably a couple $1 million. That cannabis, I bet, is being exported to Germany.
Huh. This is an interesting story. I wasn't really caught up to speed with who they
Very.
are because, that's the thing.
They're going to make a...
Go ahead.
Yeah. They're going to make a very large cash. They're going to make a very large... I would bet they're going to make a very large acquisition in Europe, the U.S., or both.
Huh.
Yeah, they're very under the radar because they haven't blown their brains out. Like I said, they haven't done these huge acquisitions. I mean, they got a claim with the Altria agreement way back when, but you don't hear a lot about them all that much because they've made a couple small acquisitions in the States and they operate in Israel and abroad, but they haven't really made the big splash acquisitions that really have caught a lot of attention. They sort of operate under the radar. They're doing their thing. And to me, it looks like they're preserving their capital for when, at some point down the road, it makes sense. And obviously in the U.S. right now, hasn't really made a lot of sense. So they're not trying to maneuver or get under the radar, do exchangeable shares again in the U.S. They're not doing any of that kind of thing. They're sort of flying under the radar right now, which may be the smart strategy.
Yeah. Exactly.
Yeah.
All right, that's it for cannabis. I'll let you guys run. But last thing, we got some positive feedback regarding one of your comments last week at the podcast, Anthony, pertaining to how a lot of these psychedelic companies are going to start gobbling up competition and becoming like portfolio companies. So I explained in a nutshell through a couple of comments on LinkedIn as to like what exactly that means. But real quick, if you can recap some of the companies that you think that want to become portfolio companies and how you see this playing out in reference to like what you meant last week.
Yeah, I mean, I don't know which companies will get rolled up, as I'm not really in tune with a lot of those management teams right now. But I mean, from a big pharma perspective, I mean, they build portfolios, so they have drugs that go into different therapies, and then they create efficiencies through distribution, manufacturing, and be able to drive the margin expansion in those products by running portfolios, just like they do in beverage.
Yeah.
They've got the brands, they've got the IP, and then they create the efficiencies throughout the manufacturing and the distribution process to ultimately drive those massive revenue numbers. If I was big pharma right now, I'd probably be looking at just a diverse portfolio of indications. So who's making waves in DMT, who's making waves in LSD, psilocybin, and then look at the associated therapies or associated disorders that they're going after. So alcohol abuse, eating disorders, depression, anxiety. Like they're going to want drugs that are going to not only, I guess, not only push momentum forward in treating these disorders, but also be able to kind of play defense and roll out something that's, if it's going to cannibalize their traditional drug in the market, like an SSRI or something like that, they might as well be cannibalizing it themselves instead of just taking the hit openly. It's a hedge.
Yeah, makes sense. Interesting conversation I had actually earlier this week. FDA approves MDMA. He compared it to it being as equivalent to, say, an announcement like safe banking passing in cannabis. Like, that's how big it could be. Do you agree with that, Anthony?
Why?
What do you mean?
Did he say that?
Well, with regards to like generating institutional interest and in actual buying, he's saying that with FDA basically approving MDMA, that's the kind of announcement that'll make a big turning point and could be as big as, say, something like safe banking passing in cannabis. That's how much interest it's going to generate.
But does that mean the FDA? Does that mean the FDA is allowing it for therapeutic use? The FDA is allowing it for research purposes. Like, under what context is the FDA, I guess, loosening up the regulations around MDMA?
Well, that remains to be seen, but it's from a pure medicinal standpoint. But when you look at the current situation as to where we're in and the help that's being required and other countries obviously approving it now, it's like this is the kind of announcement and forward progress within an industry that's going to garner a lot of attention and interest from institutional money coming in and in growing.
I think so. I mean, I don't think it's... I don't think it's as impactful as something like 280E. I mean, 280E gets lifted, there's margin expansion across the entire industry.
Yeah.
All these companies, the profitability goes through the roof overnight. Lifting or taking the handcuffs off of like something like just one substance like MDMA, like obviously that bodes well on a go forward basis for all the other molecules, but I don't know if it'd be as impactful per se as something like a safe or and 280E getting abolished.
Do you think there's any truth to that, Ben?
No, I agree with Anthony 100%. I don't think it's as impactful because I think that there's more. It's too simplistic to think that MDMA passes through for therapy with the FDA that's going to have this big impact. There's different hoops to uncover. First of all, like, what are the indications? It's probably not going to be like the cure-all for depression right away.
Right.
It's going to be a slow ramp up, right? In terms of like the institutions already know this is going to happen in a lot of ways because it's already happened in Australia, right? So you would see probably a lot of front running to this and getting in, seeing that the roadmap to approval here is coming, and I think everybody kind of knows that, right? So I don't know if it'd have the same impact, but it would definitely help. That's for sure.
Yeah. Great feedback, gents.
Yeah, I mean,
thanks for checking in.
I'm very
hesitant. Finish your
Go ahead,
thought.
Fred.
No,
I was going to say I'm
thought.
hesitant to these. I'm hesitant to these headline catalysts propelling these markets any further. I mean, we've seen what we thought were going to be market catalysts. I'm not going to name names across companies, but they were sell the news events.
Yeah.
Every time we thought something was going to be a big catalyst. So I mean, until proven otherwise, I'm not getting too excited about any headlines. Granted, it'd be amazing. I mean, it'd be a step in the right direction.
Yeah.
I think we have to get to phase 3. We have to get to phase 3 and get these big pharma companies interested. But I think investors also have to realize that just because, like, this is a complicated therapy. It's not just the administration of a drug. Most of these big pharma companies, in drug development, dispense drugs. They're not getting into. They don't know anything about psychedelic assisted therapy and all the clinic apparatus that goes along with it. So it's complicated, right? For them to make big investments, they're not just investing in a drug that they have all their doctors and marketing apparatus behind. It's now they have to invest in clinics. They have to invest in who's going to dispense these drugs and all that. I think it will come, but I still think there's time for this research to get through phase 3 on the public side and go from there. But will MAPS help? Will MDMA help approved for PTSD? Absolutely. It will definitely open a lot of doors and have a lot of eyeballs.
All right. Well, we want to hear from you. Leave a comment below. Do you agree with these guys? Is MDMA as big as safe banking? Yes, no? Leave your thoughts. Gents, appreciate the time. We'll check back in with both of you later this week.
Awesome. Talk soon.
Sounds good. Thanks, boys. Thanks, guys.
Hey everyone, thanks for watching, and if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information, share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.